Welcome, guys, to another short video that Dan and I are putting together to just help guide you along in your land flipping or investing journey. I think a lot of people have learned the wrong way to do this business, and we want to guide you in the right way because the most important thing about real estate is location. And I think that's lost sometimes in the land investing world.
Yeah, I strongly agree. A lot of what's being taught, or when I see people who are brand new pulling these county-wide lists where they're just pulling everything within the county, that's crazy unless you have a huge marketing budget. So especially for people who don't have a lot of money, that is a terrible way to start.
Absolutely. Well, and I want to emphasize the point of the first three rules of real estate are location, location, location. And if you think about the counties within the United States, and you can kind of see it on my wall back here I've got a big topographical map of Colorado. There's areas, I mean, right here in my home county that are vastly different of suburban, high growth areas. Not going to be a lot of data for the type of land that we're typically seeking out because there's not failed subdivisions or, just vacant lots around. And if you try to price it and compare it to the far east where it's the plains and it's all very different rural land, I mean, or in areas in the southeast where it's the Everglades or wetlands and they're all incorporated in the county, pulling at the county level it's just crazy. It doesn't really make a lot of sense. And I think that it guides a lot of people astray, and it makes, for a lot of wasted time, effort, and energy whenever you're really trying to target only certain specific properties. So that's what we're going to kind of at a high level today walk you guys through how we really do the sniper target focus on particular areas within a market.
Yep. And I'm going to start by giving examples. We'll talk through them, and then we'll talk about, well, in practice, how do you figure this out? So here's an example. This market is very, very slow now, but it was one of the first places I ever did business in. This is Pueblo West, Colorado. And I remember getting a lead years ago, and I tried to comp it, and I was way off. And why was I off? It was, let's see, right down here somewhere. I forget exactly, but I want to say right over here in the Tijuana seaside area. And so I was looking at solds right here in Bellflower, Watermelon, and thinking that they were comparable. Well, I wasn't looking at the zoning map. And these quote unquote comps I was looking at were R3. So this area, now I know it very well, is all R3. And then over here, you're dealing with single family, R3's duplex. And the duplex lots were far more in demand than the single family. And so I comped it wrong. It didn't have the value or the desirability that I thought. And long story short, I didn't buy it. Thankfully, I found this out. But point being, I should have been at the time having separate lists and separate kind of rules, right, for the duplex lots versus the single family. And at that time, everything was hot. The duplex lots just sold higher. But this is a great example. There are a number of markets, and I'll show you one in a second, where I've only targeted duplex lots because there's endless single family lots. They're really cheap, but the duplex lots are worth substantially more and fly off the shelves. And there are other examples of this. Sometimes it's, maybe you're in a subdivision like this and there's lots of quarter acre lots, but there's a few 1 acre lots and those sell like hotcakes. Or there's a lot of 1 acre lots, but the few 5 acre lots sell like crazy. And so that's kind of a great example of finding what's really in demand in a market and niching down so you're not wasting your time targeting the cheap crap.
Yeah, and just to further emphasize your point, Dan, I mean, it's if you think about the county and then you think about the individual towns or cities within the county and then the individual subdivisions or neighborhoods within those cities, that even within that neighborhood, there's so many changes from street to street, regardless of just the zoning. I mean, a lot of it's going to be the infrastructure of sometimes water lines will arbitrarily, at least arbitrarily to
Yep.
us, stop at any point in time, or sewer lines will stop, or the road actually stops. And I mean, that right there is going to kill a deal more than anything. So it's when you get that hyper localized knowledge of being able to go in and say, hey, I know the water line stops at Macola. And then, but sewer keeps getting extended. It costs this much more. So you're able to actually price really effectively whenever you're doing that. And just targeting land that you actually want, because maybe there is no value in certain lots in certain areas where you can't actually put in the infrastructure.
Yeah, it's funny you say that because this is a great example, and we didn't even plan that. Just down the highway, you have Colorado City, where there are very few areas with lots that are actually useful and valuable. And this whole area over here, east of the highway, is platted, and it looks like there's roads and lots, but it's just mountainous with no development. Roads were graded there in the 60s and have never been touched since. So that's a good example of what you're saying. But I want to get everyone thinking, because this could vary. Like, what is the thing that's really in demand? What is worth looking for? It can vary from place to place. So I just want to give another example. So I am selfishly giving examples of places that I'm not really doing business anymore because they've died. Lehigh Acres has really slowed down. But for a long time, this was a place where I focused on two things: the duplex lots, which I already gave an example of, and then the 1+ acre lots. I remember I got a 1 acre lot in here early 2024 for 60. We sold it at 110 within like 10 days. Because if you could get those bigger lots, there's mostly 1/4 and 1/2 acre lots in here, they would sell, immediately. They were liquid. And the duplex lots were the same way for a long time, right? And you can only find that by looking at the zoning map. One more example, I like what Mason said. Brevard County, I would hit Palm Bay specifically. That was, again, years ago. And I remember one of my acquisition managers getting a deal under contract. We thought it was a deal, but I knew something he didn't because he was newer at the time, which was to check the water lines. And the comps he was looking at, one street over, all had water service. His lot that he got under contract did not. So it was not worth what we thought. So that's another example. When we did business there, the lots with water, or even better, the lots with water and sewer, again, were like liquid. And so a lot of times we would try and only target those. So those are a few examples. And there's different versions of this in different markets, but utilities, zoning, and the larger lots amongst the smaller ones are often characteristics that are worth zooming in on just those lots. And so we have to talk about, how do you find this? That's great. Duplex lots, water and sewer, larger lots, but how do you figure it out? If you're looking somewhere that you haven't done business, that we didn't talk about, how do you find out what's in demand? Because there's lots of other things or characteristics that could be similar to what we've already described. And so the quickest way that I've found is talking to realtors, looking on Zillow, and I want to show you specifics of that, and then ultimately just doing business there. So let's start with looking on Zillow. And again, this market has really, really slowed. But if it was 2022 or 2023, and I didn't know anything about this market, as I zoom in and start to look around, I want to see the descriptions and how quickly lots sold. So right away, come down here and read this. Duplex lot, ready for your Florida investment property. All right, apparently this is significant, right? I would know that. And then listed for sale, took about 2 months, sold a little below ask, not that bad, but it was like a few days for a long time. And as you start to click around amongst solds, you will see patterns of what does every realtor mention. Ding, 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 there's one key there. It might be all the lots that are selling have septic permits. It might be their duplex lots. It might be that they're graded and power is stubbed to the build site. Another example, now this one took a long time to sell, but again, I'm not surprised. The market has really slowed here, and they were pretty darn high. But this is how I figure this out. There are so many markets where, just like this, I'm scrolling around and I see these higher price points and these lower price points. And if you look, the descriptions quickly tell you why and quickly let you know what's important. If I come down here, pending sale, price change. Oof, this one took not too bad because they dropped price pretty quickly, but it still illustrates the point. This is how you do it. You look at the Zillow listings, you look at, all right, for all the ones that sold very quickly, what characteristics are described? And it could be that they're larger, could be any number of things. Number two, when you call realtors who have sold and have them send you comp sheets, sort it by days on market. And is there a common characteristic amongst all the lots, in a specific neighborhood or zip code that sold really quickly? Are they all over a certain size? Right? Is there some improvement done to all the ones that are moving? Are they all in a certain neighborhood or in an HOA? HOAs aren't a bad thing. I don't know where that comes from. Just as an aside, I've sold dozens and dozens of lots in HOAs. And then finally, and you guys might not like this one, but the reality is some of these characteristics I've just found out by doing business somewhere. And so there's a great example of this. We sold 7 or 8 lots in one little subdivision this month in North Carolina. And it was a combination of two of these things we just described. Number one, I had a great realtor in the area who told me that this area was accelerating and she knew a few buyers that were buying anything that came on market below a certain price. And then number two, I knew this area had been ignored for years because it used to be very, very cheap. I've done business in the general market for a long time. And so I saw, okay, these lots were trading at, 4 to 8 last year. Now suddenly all the listed lots are like 30K minimum, with there was one straggler at 25. And I've talked to a lot of these sellers, and they're just looking for a few grand, right? And so between the local expert telling me she knows buyers there that are ready to buy, and then me knowing the backstory there, and then seeing suddenly all these listings are much higher, I'm going, okay, this is an opportunity. So we marketed like crazy. We flipped like 8 lots in that area. And so that one was a combination of having that local expert and having done business there. So those are the best ways I have found to establish these little honey holes within markets, whether it's the specific zoning, utilities, whatever it might be. Look, kind of do that second level analysis and don't just spray entire counties unless you have some massive marketing budget. And you can find much cheaper ways to target prime lots and save yourself a lot of money. Anything you want to add,
Absolutely.
Mason?
No, I don't think so. I think that covered it really, really well. And if you want to see more in depth on how we're really pulling our data and sending out marketing material, please join our Skool community. It's Ground Up Land Community on Skool, Skool. And we look forward to giving you guys more information in these short form videos.